What's up, everybody? What's up, traders? I am Mozzie the Trader, and in today's video, I'm gonna briefly go over and I'm gonna share with you guys how to interpret volume. All right, this is kind of a highly anticipated one, and it's important to me because I always tell people you cannot trade Wyckoff if you don't understand volume, right? So hopefully this video is short and sweet, and it'll give you guys a little bit more insight on how you can interpret volume better, right? So really quickly, volume is directly correlated with Wyckoff's third law, and that is the law of effort versus result, right? And I went over the laws in that Wyckoff beginner guide video, and that's on the page. If you still need to learn some of the laws or know what they are, you can go back and check that video out. But all in all, today's video is about volume, and that revolves around Wyckoff's third law, effort versus result. Okay, so in my own words, Wyckoff in itself is the exposure of larger market operators' activity, specifically the process of strategically buying and selling in financial markets, meaning that Wyckoff is how would you say? Wyckoff gives you a template of how these larger market operators operate when it comes to markets, how they enter and how they exit, right? So volume comes to play, it highlights their activity. It highlights when they're entering and also when they're exiting. Why do we want to understand this logic? Well, for one, we know that these larger operators, firms, speculators, brokers, etc., they participate in the market just like you and me, just like us, but they're the only ones who has the purchase power to influence price, meaning they can change price. And also they're the only participants in the market that can leave footprints or leave these volume bars to where we can see their activity, right? Retail traders like you and me, we don't have the purchase power to do so, and it'll never happen to where you see anything you do on a chart have an effect on volume, right? And two, we know that these larger operators, they often work together, they often cooperate to move prices for their benefit. So what happens when you are trading against the desired price that they're going for, right? Or when your stop loss is in the desired price area, right? You ever heard of manipulation? Right, keep that in mind, okay? Lastly, number three, when I say footprints, I basically just mean these volume signatures, right? So the volume indicator displays the larger operator's market activity. Yes, it's an indicator. Yes, it's considered lagging, but if you're able to correctly decipher what this means, then you can use it to your advantage. And that's what we're gonna go over today. So starting off, effort versus result. So all this means is effort equals volume versus the result is the price action. So high effort or high volume like this should give us a high result, or a, how would you say, an equally effective change in price, a high result. So when we see high volume, you would want to see that accompanied with breaks of structure, continuing trends, things like that. We don't want to see high volume and then we don't break any structure. That's when we want to start paying attention to what's actually happening in the market, so we don't fall victim to manipulation, right? So how does understanding effort versus result give us an advantage in the market, right? So for one, we can spot fake outs, and I'll just type this out. Spot fake outs, fake breakouts, aka manipulation. It also confirms the strength or weakness of supply and demand. Right. And then personally for me, it also gives me an area to enter. But that's for another video. So what I'll do now is I'll just show a couple of examples so you can basically see how this is applied, right? So again, it's best to be on lookout once we create a range. You see I created this range here. We have this low and this high, everything that happens between those 2 points before we break out. So this is my trading range for now, right? So I want to note high to low, and also I want to note where equilibrium is, right? So when we're coming into these concepts, what we want to do is be on the lookout once we create this range and prices headed towards the established support or resistance. So again, we come down, we make this low, we make this high, we pull back below equilibrium, and we push back up to the upside. So what I want you guys to pay attention to right now is, so this candle here is directly related with this volume here. So quick tip, volume is bar for bar, candle for candle. So this candle right here is this volume, the candle before it is this volume, so on and so forth. This green candle right here is for this volume, the next candle is for that volume, so on and so forth. So what I'm doing right here is notating the type of volume it took for the buyers to bring this down, move to a halt, right? So once we push down and we create this range, now I'm paying attention to these levels. This is my newfound support, and this is my resistance, right? So we push down, make a higher low below 50%, and we come back and test resistance, right? So look at what's going on with volume. Once we get in this important area, not in between here, I'm not so much concerned about that. But what I do want you guys to see is we go from high to low and we have a higher low, right? So as we push up, you'll see that this selling volume is high here, it's high here. We're starting to push down. We got our higher low. Selling volume starts to get lower as we push up. So we have a higher low here, thanks to that gap. So now we have a higher low, another higher low, and volume is basically dropping off for the sellers. We push up, we get high volume for the sellers, but we're still making higher lows, right? So at this point, it might look like that we are ready to break and trade above this level, right? But look at what happens. First, we establish a high here, and we do that with a lot of volume, a lot of effort. But what happens as a result of this effort? All this volume comes in and we do nothing, right? So if you're looking at this volume right here, this volume goes with this candle. And when you see stuff like this, you have to ask yourself, what was this candle trying to achieve? With all of this effort, it achieved basically nothing. And this type of effort is the same amount that threw us into this range, but we have a smaller result on this candle than on this one. So for these candles to have similar effort, you see the result is different here than it is here. And then also this result is coming at a level of resistance, right? So that's our first sign that the buyers aren't strong enough to push past our quote unquote resistance. And as we push up from that point, you see the buy volume basically starts to decline and just dip off, right? So once we get above this high, we have no strong effort, low result. So now we're failing to create a new high and we're trading back to the downside, right? So trading back to the downside, we hit equilibrium, we take this low, and we eventually come down and swipe the support, the original low of the range. So the same way we came up to the top with literally no volume for buyers, so we were unable to break this structure, low effort, low result. We come down to the bottom and we see here, we're still in this range. You have your high influx of sale volume in this large candle, high effort, high result, because the effort is large, the candle is large, right? As we move down to support, what happens to the sale volume? It drops off, it becomes lower. And once we get to the point of where we're supposed to break this structure, we actually get a reversal, the influx of buy volume, And this volume is literally the same as the original volume that threw us to the range, right? So we poke that low, liquidity grab or whatever you want to call it, and we push back up to the 50, and then you see this, right? So we have one here, this big influx of sell volume, this sell signature, but what did it achieve? It gave us a higher low off of support. So we push up again, and we have right here the largest volume out of this whole range. And then we always have to ask ourselves, what did this volume achieve? This volume is associated with this candle here, but what did we get from it? Virtually nothing. If we're looking at the whole schematic, or we're looking at the whole structure, we're looking at structure as a whole. This is our previous high, and this influx of sell volume, this effort here, the result was a lower high. So high effort, low result, and now this solidifies to me that the buyers are basically too weak to push past this point in the market. Once we come up, create this high, we barely break out of it, and we come right back, and then you have some failures in there. So here you see the last little hoorah of buyers in there, and then you see they're basically too weak to push the market. So at that point, we have, so at that point we have low, high, we push up to the high, low volume, low effort. Once we get up to the high, so low result, low volume, low effort on the sell side. Once we get to the low, so low result, no breakthrough, no break of structure just yet. Then we have an influx of volume, higher volume with a lower result. So we have high effort, but a low result, right? So this is confirming the weakness of demand, and it's confirming the strength of supply, the sellers in this area, right? And what else did we do? We spotted our fake out over here, right? Now, when it comes to entries, this is it's another video, but the entries here is basically telling that this is the last level, or this was the last push or the last breath of buyers, I guess you could say, because after that, the market just literally dies off. But what happens when we break the structure? You see where volume is, right? So when we break structure like this here, sell volume is higher than it is over here. Not here, but the result is higher. But sell volume is basically high, and it's conducive with the it's conducive with what happened. So we have high sell volume and we have a high result, meaning high sell volume coming in once we are breaking structure to the low, right? So now we know that the larger operators are behind this move, and they are selling this. They're selling dollar, or they're buying dollar, selling pound, right? So that's typically how it works. And I'll just use another example. Let's see. Right, so first I want to establish my range. So I have high, this low, right? And it's basically my range because from high to low, had a lower high, broke this structure, came down, created this low. All right, real quick. All right, so I'm taking note of equilibrium as well. All right, so boom. Again, once we have created our range, we want to observe what volume does at these levels, support and resistance, right? So we go from high to low, and we pull back to 50%, right? And then we push down to go lower. Now, if this is a downtrend, most people are probably going to see this like this. All right, so we have high, low, lower high, lower low, lower high, which is probably a 61.8 retracement, lower high, and then a push down to go lower, right? So we're supposed to be boom, 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 so on and so forth, right? But what happens when we break structure here from this lower high, look at sell volume. We start here and we literally just decline as we approach the low. So that is a sign to me that the sellers are too weak to hold price down below this low. And that we're probably going to be revisiting either equilibrium or the full breakout for this range, right? The full retracement for this range, or even the breakout, right? So next move, okay, you see no volume, we retrace, we come right back into the trading range, and then I see this here again. So look, high effort from sellers, low result, because you see the candle close, a lot of wicks and everything, so that's manipulation there. So we have high effort, low result, and we also made a higher low off of support. So at this point, you can start to look for buys, or you can stop looking for sales, either or. If you're not comfortable with buying at this point yet, then that's cool, because I know some people who will wait for this break and then for a retrace here, which is also fine. But once you get this candle here and all of this effort, this is confirming that what? Sellers are not going to trade past this low, these levels. Not trying to tongue twister. Sellers are not trying to trade past support. So that is solidified with that volume signature, with that candle, the effort and that result. That's the story that they tell, right? So from this point on, this low should hold. So whatever trade opportunities you find in here, you can have stop losses below here, right? And then you can take this to the upside. And upon doing that, your targets will be resistance, and then also the extension targets. But look what happens once we're breaking resistance. You see here this high influx of volume, right? High influx of buy volume, and you see the result. We push way past what was resistance, shallow pullback, and we push right up to the extension targets. And no matter what entry you get down here, typically, like, this is this setup, or this type of, how do you call it? Sorry about that. This type of analysis is what'll get you those better risk to reward trades, because you're confirming the strength of the side of the market that you're on, or you're disproving the strength of the side of the opposite side of the market. So you basically using the process elimination to see which is going to prosper. Is going to be suppliers, is going to be demand, it's going to be sellers, it's going to be buyers. And those signs are literally usually in front of you once we're at support or resistance of a range. And remember, high effort should give us a high result, low effort should give us a low result. So we have low effort here, low result, high effort here, but a low result. So at this point, that's manipulation. And that's also telling that all of this effort for what? What did it achieve? Nothing but a higher low. And now we're able to initiate positions here, because we know that the sellers are not strong enough to push past this point. And again, how do we know that? Because all of the effort they put in and the result from that. So that is a direct example of effort versus result. And you can use that to your advantage when you're trading in ranges, or just when you're trading period, when it comes to confirming moves, or if you're on the right side of the market or not, right? So again, using that to enter positions and everything is well, is always good. It's always conducive, and it's very good if you already understand Wyckoff phases and Wyckoff logic. So that is my example of effort versus result and how you can interpret volume. Hopefully this video is not too long and you guys can just replay it whenever you need to, or replay it however many times you need to understand. But again, you guys know the routine. Any questions, hit me on Instagram, hit my DM. I'm usually quick to respond. And I will see y'all in the next video. Peace.